A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the 5813 EMA Scalping Strategy Session. Today, we're going to go ahead and show you how to trade the 5813 EMA crossover strategy. We're going to do some live scalping, some live trading on tight time frames. Our key markets today, we're going to be looking at spot gold. We're also going to be looking at the dollar, yen, and then also the E-mini NASDAQ futures. That's one that we've been frequenting recently. Seemingly, everybody's trading the E-mini NASDAQ right now, so okay, I'm game. Let's go ahead and do it. I want to welcome everybody. If this is your first time, fantastic. Welcome to the room. We are going to cover how to set up this strategy, the rules of this strategy, and we are going to do some live trading. So this was a trade that was executed a little while ago here. In your spot gold market. Nice 1 minute crossover developed right there. Nice, beautiful close. And since then, it's just been a train wreck. Basically well, not really fighting a trend, but definitely fighting some flat market conditions with gold. If you followed any of our live streams, we try to trade gold a lot. I know a lot of you do trade gold, but this is a situation this time of day where gold is extremely fickle. So if you're trying to trade crossovers, if you're trying to get on the board with scalping strategies from crossovers, you'll always understand that when the market flattens up, you're typically going to run into problems. You'll see frequent crossovers, a nice weave formation, and that typically is going to lead to losses. So I want to welcome everybody back. I think we're going to have a fun time today. That trade right there, I think it got stopped out or whatever, but we're going to go ahead and execute a few that are live. You'll also notice that you've got to take into account your spreads if you're scalping gold spot. We went through this yesterday as well. Going to be an interesting day on the market. So a little bit of bullish participation, sort of a mixed bag in my view, but we're looking at commodities heavily. Crude oil's up big. Gold sort of on the rally again. U.S. dollar, Japanese yen's broken out above 163, and also the NASDAQ. The NASDAQ seemingly putting on a show every day. Today, relatively flat. So a lot going on there. All right, guys, we're going to get right back to it. Let's see. Callie, good to see you out there in YouTube land. M-Lam, good to see you there. Welcome, Ralph H. Good to see you, Ralph, over in the How to Trade community, and Tuku. All right, everybody, let's go ahead and just get started with this 5813 workshop. This is a pretty good scalping strategy. We're going to be using it on compressed time frames today. You can see that last trade we placed was like on a 1 minute time frame, which can be a little bit fickle. But we're going to go ahead and look at the ones and fives, and if we have to go down to maybe a 30-second chart or something like that, I won't hesitate. We just have to be able to get good enough price action to make it worth our while. So that'll be done on the NASDAQ futures. All right, 5813 EMA strategy. Let's go ahead and just get started with the rules and get you up and running with it. In this workshop, on this webinar, I'm going to show you how to get set up on TradingView and MT5. That's just going to take us a second. But what we're going to be aiming for is our three strategies, our three EMAs running essentially in the same direction, and we're looking for a crossover. We're looking for the 5 to cross the 8 and price to close on the buy side of all three or the sell side of all three. So this is a good look at how this thing is going to look once we're up and running with it. And you can see right here, here's our rules. So we're going to go back to the rules here in just a second. Let's go ahead and get this set up really quickly on TradingView. So for TradingView, you're just going to go to indicators. You're going to go down to moving average. It's in here somewhere. I don't know if it's under exponential or not. I haven't set this one up in quite some time, but we're going to go down to moving average. Moving average exponential right there. You're just going to go ahead and click it 3 times. Then you're going to go to settings. You're going to go right there. You're going to dial in your inputs. You're going to put in 5. That's what I would recommend. So you're going to go 5 there. We're just going to base it on the close, nothing fancy. Style, I always like my 5 to be red. I always like that. That's our hot strat. That's our hot or what I would call our trigger. That's what gets us into the market, our 5. So then you go to the second one, you're just going to go there, and you're going to go right there to inputs. You're going to dial this into 8, something like that. You're going to go ahead and leave that one. I like to leave that 8 blue. And the 13, I'm going to get a lot of questions about the 13. The 13, we're going to go ahead and we're going to make that one purple. So that's exactly how you set this one up. Really not that difficult to do, guys. Very, very simple. That gets you up and running on TradingView. One more quick second, and then we'll get to trading. You can see MT5's platform over there. This is your switch markets MT5. How we do this, a little bit more involved, but not horribly difficult. You go right up there to insert. You're going to go to indicators, trend indicator, and then you're going to go to your moving average. You're going to go give that a click, and we're going to go ahead and dial this in. Remember, your method, you're going to have to select exponential from the drop-down list. You've also got dark violet there, periods 13. Okay, we'll do it. Go ahead and do this one in reverse. Indicators here, trend, going down to moving average. And what do you got here? Let's go ahead and dial this into an 8 exponential. Let's go ahead and make this one a blue one. Somewhere in there. Okay, so there's your blue. And then one last one, insert indicators, trend, right down here, moving average. You're going to have what? You're going to dial this in for a 5. That's going to be your period 5 there. Visualization, you're going to keep this right around a red, somewhere in there. Remember, you want to be able to easily tell. You want to be able to look at this and easily tell where the crossovers are, number one, and what exactly is happening. If you use red for the short duration, that's your hot. I call that my hot. That's what gets me in. That's the trigger. And then our blue, sort of our baseline. And the purple is our 13 EMA. So definitely want to get covering that to begin with here. And that's exactly how you get set up. All right, how do you trade this thing? Relatively straightforward. When the 5 crosses the 8, we're looking to trade. So when our red crosses our blue, when the hot crosses the blue, we're ready to trade. Or is it long or short? That's the next question. Price must be above all 3 EMAs. Price bar must close above all 3 EMAs for us to buy. So we're looking for the crossover and the price to cross above, that's a buy. If we see the cross under, the 5 cross under the 8, and price closes below all 3, that's the sell. We're going to buy or sell on the first bar close. Couple of things that you absolutely have to understand. You have to understand when the crossover happens and what exactly is going on. So right here, this U.S. oil 5-minute trade, we just had it bang. You'd have been right here. There's your crossover. Price closes on all 3. Let's go ahead and just go sort of take the long to show you exactly what I mean. Now, our trade location's not great here. It's not great trade location, but there's our crossover. There's our hot. All right, there's our 5. 5 crosses over the 8. Bar closes above all 3 EMAs. Think of the 13 EMA as being your trigger. And excuse me, not your trigger, but your confirmation device. That's absolutely imperative that we understand the 13 EMA is probably the most important of all 3. Take profit. Let's go ahead and put take profit over here. Stop loss. Got a couple of options with a stop loss. Stop loss right here, you can put it beneath this signal bar. I don't mind that way at all. If you want to take a bigger risk, maybe put it down here a little bit. Okay, that sort of gets you in the game, 8608. Let's go ahead and play this one relatively tight. We sort of had an elongated green bar here. We're going to go ahead and rally to the top side, give ourselves a little bit of space maybe for that spread, 370 somewhere down in there, and we got to set this up at least a 1-to-1. Now, we're going to have sort of an in-depth discussion about where we should be putting our profit targets, but the stop loss, excuse me, the stop loss is the most important thing on this strategy. Now, anybody can see a crossover. Anybody can watch two things, watch one moving average cross the other moving average and get you in business. Anybody can do that. Anybody watching this can do that. It's not a hard thing to do. What makes something like this work for you? What makes a 5-8-13 crossover work for you is picking the right asset, picking the right time frame, and also aligning your stop losses prudently. Now, stop loss can be anything you want it to be. You can put a trailing stop on this type of trade. You can leave it right here beneath the crossover bar. You could place it beneath the previous swing low for a buy or above the swing high. It's your call. For me, I'm always looking at how big that bar is. That's a pretty big green bar. I mean, right there, we've got a significant range, about 29 ticks, somewhere in there. That's plenty of risk for me. So what we're going to do is we're going to go ahead and put the stop loss right beneath that signal bar. We're going to wait to see if we rally a little bit higher. This trade should have been long from right in here. We got here a little bit late to the party, so this trade should be about break even. All right, so what we're going to do now is align our profit target. What does our profit target need to be? At least a 1-to-1. At least a 1-to-1. It has to be at least a 1-to-1. If it's not a 1-to-1, you're going to find yourself running into trouble. Guarantee it. Over time, you're going to find yourself running into major trouble, taking small profits and large losses. That's the reality of trading. That's the reality of the situation. So if we're going to look at something like this, I could put it here at just a static 1-to-1. Okay, that's great. That's easy. That means we're risking 370 to win 370. That's not a problem. We could also base it on market structure. Many of you really like the ICT stuff. I've seen a lot of live traders, live streamers there that love ICT concepts, and they believe it's the holy grail, and that's great. So in that instance, you'd probably be looking at that bearish liquidity sweep right there that developed right there at right around 11:10 a.m. this morning. That would essentially be a 1-to-2 ratio. I don't have a problem with that. If you wanted to take it even further, you could shoot for the top of market structure that really began. What day does that have marked? It would have been earlier today, earlier in the pre-market. So this would have been your pre-market hours. Not really that great. No real volume to speak of here in crude oil, but that would be the top of market structure. So you could say that the bottom's in and you're going to take a run at that. If you were going to do something like that, understand it's probably going to be a swing trade, and I would definitely be adjusting my stop loss down here to give myself the most time and the best chance to win. That's what I would be doing there. So for me, personally, I'm a conservative guy. Those of you that have watched my my live streams or have had a one-on-one with me, you'll know how I like to trade. I like to win. I like to win a lot. And a lot of people don't believe you can be a successful trader doing that. Still standing. Been here since 2011. Still standing. So I think there's a lot to be said for taking profits when they're there and not trying to force a round peg into a square hole. So we definitely want to cover that. So that is really the big psychology of it. The biggest things that you're going to need to remember about the 5-8-13 is, number one, you're going to need to be consistent with your execution. That means your stop losses and your profit targets, whatever you're doing with them, be consistent. If you're not consistent, you're going to find yourself losing the trades that you let sit there and maybe winning the trades that you're cutting off, and you'll see the price go to the moon and you're already out. So these are psychological issues that you're going to have to work through yourself. I talked to a trader yesterday, and that's exactly what he was telling me. He was telling me a lot about, hey, listen, I'm getting out of the market too soon. I'm getting out of the market too soon. Every time I get in, I'm getting great entries. I'm patient. I'm doing everything I need to get in, and then I'm getting out way too soon. Well, if you're getting out way too soon, that's a problem. But it's only a problem if you're taking huge losses on your risk, on your initial risk. So always remember, no matter what you do, there's no way to run from it. If you lose more than you win, you're a loser. You're a losing trader. That's the bottom line. So you've got to figure out a way, either on a per trade basis, a per day basis, or a per week basis, to skew those and flip those opportunities in your favor. You have to do it. All right, so let's go ahead and let that one twist. Let's go ahead and go on the prowl for something else. All right, here's a good look at gold, 5-minute chart. I would love a 5-minute buy right here in gold. Let's go right down to a 1-minute chart and see if we can get a 1-minute crossover breeding. Okay, so we had a cross under right there. That's been significant. There was sort of a crossover. That was the trade we took a little bit ago. I wouldn't really call that a quality trade. Probably should have stopped ourselves out right there. But then you got the cross under. This type of formation, if you don't learn anything else from this, the crossover stuff's pretty easy to master. Crosses under, and you get a close beneath all three, you're looking to sell. Crosses over, you get a close above all three, you're looking to buy. Well, this type of situation right here, I thought I had my highlighter. It shows I'm on the ball today, huh? Very frequent crossovers can really be difficult to trade. I call that a weave. When you see the market flatten out in trajectory, very difficult to trade crossovers, because you get frequent crossovers and typically you get into that choppy price action that knocks you out, knocks most people out. So, all right, so right here, what are we really looking at? Well, we're looking for a close. We're looking for a bullish close up above all three. I got this question a while back, said Shane. Who cares about the 13 EMA? Let's just trade the 5-8 crossovers. Who cares about the 13? And I go, the 13? The 13 is the straw that stirs the drink. The 13 is the garnish on your plate. The 13 is the steak. It's everything. If you don't get confirmation from the 13, you got to punt. You can't trade it. Why? Because the 13's a monster. That's what's giving us a good look at maybe the broader trend. A 5 crossing over the 8, I mean, realistically, you might as well just trade like a 9 EMA strategy and go with that. Very, very short time frames on the EMA. Current price action, sure, and that's absolutely fantastic, and that's great. But where's the confirmation device? Confirmation device is your 13. That tells you that there is a shift in maybe the broader trend, and that's what we're looking to do. We're trying to get in on waves. We're looking potentially to come off of swing lows, maybe get a little bit of love to the top side and selling underneath swing highs and getting a little bit of love to the downside. We are playing with market structure and price action. The way that we can do that the best is nailing this 13 confirmation. Now, we're going to talk about the extra confirmation in just a minute. I don't even know if we need to introduce it for today, but we will, just because there is a ways that we can filter these trades, and I'll show you why the last trade, essentially, with gold was an absolute duck. All right, so we're waiting for this gold setup right here. 1-minute chart, extremely choppy, extremely volatile, or excuse me, extremely choppy on this time frame. What we want to do is we want to get a clean setup. So what we need right now to make this clean is we've got to see gold close up above this 13 EMA, and then we get our crossover right there. Be forewarned, the smaller time frame that you use, the bigger challenge it is to avoid choppy market conditions. No question about it. If you take this down to a 15-second or a 30-second, it becomes very difficult. You're going to have to deal with slippage, enhanced slippage, and also choppier markets, choppier price action. So ideally, if we're going to scalp, yeah, you probably want to be looking at like a 5-minute chart, 1-minute chart, But even the 1 minute charts, you've got to be focused on when that is extremely active in the markets, and that probably is not now for gold. We're going to go ahead and look to take it anyways, though, because I want to get a trade in and show you another one, how we set it up perfectly. All right, so we are very close to a crossover. This one would not qualify. Why? We're working on the crossover, but we're right at our 13 EMA. Okay, now I'm starting to really get interested. Now I'm interested. I know on the next bar close, if it's above the 13 EMA, we're going to get our crossover, and that's going to be our cue to send it long. So we're going to go buy order. We're going to be buying market. Now, it's not the best way to enter. It's not the best way to enter because a market order is filled at the best available price. All right, it's filled instantly at the market at the best available price. What market orders do is they get you in. They get you in, but they really are bad for slippage. They're bad for slippage. And something like a gold spot where we're trading with like an 80 pip spread right now. See, the gold goes against us right there, so we're not going to get our trade set up. But what you have happen with these spreads is it becomes very, very difficult to scalp. So a 1 minute chart, is it the best candidate for gold? Probably not. The problem is if we look at the 5 minute, I think we're going to be sitting here for a few hours before we get our crossover. Just a quick look at your 5 minute chart, though. I mean, this is an incredible trade right there. There's your sell. There's your short sell. Boom, there it is. Where's the crossover exactly? There's your crossover. A little bit earlier today, there's a crossover. There's a cross under for a nice big scalp. Crossover on the 5 minute. So you can definitely see what I mean that, yeah, the 5 minutes going to be a hell of a lot better than the 1 minute. Now, unfortunately, on our live stream, we've got to figure out a way to execute some trades, and that would be a good thing to do. And you can see right now we're not quite there. We're not getting it. So I'm going to move on to a Forex pair here. We're going to look at the dollar yen. Let me see Sean Evans. Good to see you, Sean. Welcome. Hello. You got a cup of coffee, cup of Joe. This is my second one today. Throat's dry. It's been hot here in Montana, that's for sure. Let me see Chan. Good to see you, Chan. Hello, welcome. All right, so we're going to let this gold simmer for a minute. We're a little ways off of getting a trade, but we'll go back and recap that 5 minute chart. That's a big one. I mean, if you take a look at the day you've had on gold trading the 5 minute on this strategy, very, very, very good. Very good. All right, US dollar, Japanese yen. This is a 5 minute chart. We sort of missed the crossover right there. That's beautiful stuff. Absolutely beautiful. You got in on a big runner. Let's go down to a 1 minute chart. Now, I don't advise this. I really don't, especially not for a Forex pair, but it may give us an opportunity to illustrate exactly what this strategy can do from a scalping perspective. Now, the first thing we're going to have is an extremely tight trade. Extremely tight trade. So you're going to have to figure out a way to make it worth your time. I don't think you bet that much, but what do we got here? Maybe 200,000 units, something like that. Yeah, something like that's not too bad of an idea. Okay. Now, what we're looking for, and we're going to blow this way up because we've got to see exactly what's happening with price. Number one, you can see that this is not a lot of space. Dollar yen, our stop loss, if we get the cross under, is going to be like up around 114, 63.14, something like that. And our profit target's going to mimic that. It's going to be down in here somewhere, probably like right around 11, depending on where we get our close. That's only a few pips. So if you're going to scalp with only a few pips, you're going to need good market access. That means reduced slippage. That means fast fills. Can be difficult to do with something that doesn't really move like a Forex pair on a 1 minute chart. I would say that if you're going to do this kind of trading on, say, a 1 minute chart using the Forex, you got to do it during the London-US overlap where there's more action in there, there's more volatility, and there's more traders at the table. You've got to do it then. Right now, I mean, I hate to say it, it's kind of a duck. It's 1:20 p.m. Eastern time. It's not the best time to be doing this. It's not the best time to be doing this. So we're going to go ahead and probably put a fork in that one for a second. But as far as scalping goes, yeah, you probably need to be on these real tight time frames. It's just not the right time to be doing this with the dollar yen. However, we can step back to longer time frames, and you could also swing trade this strategy, but I do like it for intraday much more than I do swing trading. All right, E-mini NASDAQ futures. Everybody trades the E-mini NASDAQ, don't they? You can see really beautiful volatility, an incredibly active trading DOM. I mean, we're all over the place. I was trading the NASDAQ earlier today, about 2 hours ago. Really good volatility for a market that's flat. It's not trending, but I mean, just take a look at the DOM. I mean, we are all over the place. This is a pretty good candidate to be looking potentially to make these trades. So we're going to go ahead and go market here. What do we have? Well, I mean, you can see the 1 minute's been good. I mean, it's been very good. We could go back through the trading day. The problem you run into is, when do we start? I'm going to answer that question in a second. But like E-mini NASDAQ, you'd probably go right back to that 9:30 a.m. Eastern. So it'd be right in here somewhere. Right in here would probably be your opening, and that's when I would begin trading this. So you can see right here, we didn't get the fake out there. That didn't cross over quite. That one crossed over right there. Pretty good move. Then you crossed back over. Decent scalp. And then, you did it again right in that area. So sort of a tough weave, but still you got good volatility. Probably picking off a lot of one-to-ones there. Then you get the big move right there about 2 hours into the session, hour and a half into the session. There's a big move. That's a significant move, believe it or not. This one right here isn't bad at all. If you really want to take a look at it, you don't get the crossover, the criteria. Could have rode that one for some money. Even that cross under right there, that's a nice little move. That's a good move. This is a big move with the NASDAQ. So something like this, and then we cross over right here. I mean, you can see exactly what I'm getting at. E-mini NASDAQ, 5813 EMA, if you're thinking 1 minute chart, probably a pretty good candidate. So we're going to go ahead and look at this one as well. Now, one of the biggest challenges of these workshops that we have is that getting these trades to set up. Let's go back and get the one live one we do have. Okay, U.S. oil performing well. That's fantastic. So right here, what are we thinking? We're mid-trade. We're in it. We're up a few bucks. Remember, my trade location was garbage. We should have been long from down here, right around 86.55. We should be up another 10 pips, but we're not, and that's okay. That's okay. We're a little bit late to the party. Feels pretty good right now, doesn't it? We're up. This trade right here is kicking tail to the top side. Now we're getting into what I call the toughest part of any trade. And that's the last, what is this, the last 30% of this thing? We're 2/3 home. We're just not quite there just yet. And this is where trading really gets difficult, guys. This is what separates the systems trader from the discretionary traders. If you're a systems trader, then you've got to execute these trades the same way every time. You have to do it the same way every time. And what that means is if you're going to play this one out, no matter what, till the end of the session, if you're going to play this one out, you don't move your stop loss, you don't move your profit target. You basically, if you're trading on your phone, I know a lot of you trade on your phones, you grab it and you turn it off. You go, okay, I'm done looking. I've got my stops down, I got my entries down, I've got my profit target, I'm done. If you're a systems trader, now if you're a money trader like me, that plays for cash, that plays for money, I'm sitting there looking, I'm thinking, okay, where am I for Monday? How did I do Tuesday? How am I doing today? Does that 160 help me? Does that 160 hit my goal? Does it hit my P&L for the week? It may be a situation where I've had a great Monday, Tuesday. This trade right here puts me over the top on Wednesday. Then we take the money. We come back next week, right? Well, we can do it that way. Or we could be a systems trader where we say, nope, I don't care. My numbers and strategy are smarter than me. I'm going to let it play out. That's up to you. If you want to do things like trailing stops or moving stop losses to break even, go for it. Do some work. Do some legwork on this. Figure out a way to make this thing sing for you. Make it work for you and how you want it to trade. It's not about me telling you, okay, 1-to-1 ratios and 1-to-2s and all that, fine. Biggest thing you have to do, if you're going to trade like this, you've got to be consistent. You can't just take it off one day and let it run the next day. You can't just take a big loss one day and then cut off the next 4 trades trying to make up your loss. You're never going to get anywhere. You got to be consistent with what you do. If you're a money trader like me, it's not wrong for me to take the money right now and rack them, put it in my pocket and go do something else. It's not wrong as long as I'm in the habit of doing that. As long as I am doing that consistently. If I do that, I'm going to be okay. The problem I would run into taking money is potentially letting trades run against me that don't go positive. That's the problem with that strategy. And that's where having a dynamic management play in your mind, that can really help you. All right, so we're running up there. It looks like we're going to get a shot that take profit. I don't know. We still got to crack 87. That kind of worries me a little bit. More than likely going to get some topside resistance at 87. Is it worth it to extend this trade a little bit? We could. We could play the breakup over 87, maybe up there to about 87.25. That could be very good for us. So that's interesting right there. We'll go ahead and let that one simmer. Let me see. Chandan, I play with the 15 minutes, sir. Yeah, 15-minute chart's great. And when you're talking about maybe $1 yen, I mean, I would love a 15-minute on, say, a Forex. Absolutely. Let's take a look at what we've got. Tough. Your trade right here was this cross under. Got the big crazy candle, right? Right on the London Open. You got that one. Then you're sort of crossed. I believe, well, I don't know if that crossed over yet or not. Nope, it didn't. Didn't really cross under either. You could say maybe you could still be holding that short, sort of getting that weave. That right there crossed over, so that would be your long. Potentially got a nice move there. 15-minute could be a great chart for you guys to trade this on. It's just not scalping. We're trying to scalp right now. I'm on real tight time frames. Let me see. Phil. Good to see Phil. Welcome. How are you so good, man? Jeez, good. What is good in this game? Look at our U.S. oil trade. It's not as easy now, is it? You will see these things flirt with your take profit. So what right there's your high? Your high is 93. We're sitting at 87.02. Let's extend it. Let's shoot for a little bit more money. If I'm gonna risk that break up over 87, I want to get paid for my trouble. So let's go ahead. Let's bring this right down to maybe an 87. Let's go 87.09. I like that idea. Getting compression right in front of 87. We're going to have to break up there to get paid. Stop loss still down. Now this is a little bit better than a 1-to-1. We'll see what happens here. What happens if you move to break even? You could get stopped out anytime. So personally, I'm a cash trader. That would have been tough for me not to take the money. Trailing stops. Experiment, guys. Do whatever you need to do with them. All right, gold. Let's go back to gold. Do we have any love on gold? Any love? Okay, right there. This would have been your 1-minute chart. That would have been your 1-minute trade. Crossover, close above all three. Let's go ahead and send it. Buy, mark. Okay, buy it. Okay, is our trade location decent? It's in line. It's in line. We're just late to the party, and that's fine. My stop loss here, with a 1-minute chart, you're going to have to probably use your swing lows. That right up in here would have been probably your entry. There's your crossover behind your big green candle, right? Somewhere right in there. Right there's your crossover. The red crosses the blue. You get the close right up there above the 13 EMA. You're sending them. Price blows up in your face, and now it's sort of rolling back in our favor just a little bit. Where would our take profit potentially be? Where would our TP be? Right there? How about a 1-to-1? Something like that. 1-to-1's not bad. It's my style. I like it. Is it enough money to make this risk worth it? I mean, you guys can see it. I mean, there's the trade just to sort of blow this thing up for you and really make it big and obvious. Where's the trade at? Here is our downflow. Nice big downflow there. Right there's your crossover. There's going to be your bar close above that crossover. That bar right there is when that crossover would have fully developed. It wouldn't have developed there. So what did we do? We came late to the party. We bought in, so we got in probably at a little bit of a discount. Still, though, price sort of going in our favor. What would be good for our profit target? We've got to have our stop loss down here. Now, I can move this stop loss up if I wanted to, maybe right beneath that swing low. I think that's playing it a little bit close. If we wanted to do that, we could, and just try to get in on the momentum. Is that possible? Well, yeah. We could let it roll. So we're up a few bucks here. Is our profit target legitimate? Is it good enough? Maybe we need to be shooting for up here. Sort of the top of market structure right there, potentially. Potentially. It's definitely something to think about. I mean, if you're in these trades, for me, I would love just to rack one up, but I think 250 was a legitimate trade. This sweep right there. So that top, let's see if we go up. Okay, right there. You're going to deal with this a lot too. But this area right here, this spike high, look at this spike high. It's topside resistance, isn't it? So were we smart for shooting for that? Maybe, maybe not. But there sort of was the rejection. Now you're coming back down to probably a break even and maybe even stop us out. That one kind of hurts. You're right there. That's a big swing. Go ahead and let it play. For me personally, that would have been tough not to probably set your profit target right in there somewhere. Why is this one such a big deal? What's the high right there? 141, 41.47. So there's still room to 41.50. So if we wanted to be seriously about maybe a profit target up the queue just a little bit further, we could put somewhere there. Potentially. Is it a decent trade? Well, I mean, it's been profitable. We haven't hit anything. The market's very thin right now. It could easily reverse in our face, just like that. The market's extremely thin this time of day, and now you're in negative territory. So how do you manage these trades? That's sort of the billion-dollar question, isn't it? You just got to let them roll. If you're going to be a systems trader and trade on like a 1-minute time frame, 30-second time frame, you just line up your profit targets and your stop losses, and you just let them roll and see what happens. If you're a cash trader, sort of like me, you're always looking to take the cash, and there's so many different circumstances that are different. Hey, what if it blows straight in my favor and all of a sudden I'm up $200 in a minute? Maybe you just take the money. You didn't take any pain. It's not like you took a draw. We didn't take a draw on this trade. That's up to you. Because now it looks like we passed on a pretty good profit. Now the market's sort of reversing against us, isn't it? Could easily come down and knock us out where we're at, 41, 43, something like that. Is it worth the risk? I mean, we're very tight. We're only about $1.80 away. And don't forget that spread. That spread's down to about 60, 59. So there's more action in there right now. But that spread could easily stop us out. That's the challenge. That's the challenge of this. That's for sure. Let me see. 1906. Good to see you. Let me see. Latil. Good to see you, Latil. Do you trade futures? Yes, I trade futures almost exclusively. That's my bread and butter's futures. We'll go ahead and look at that E-mini NASDAQ here in just a second. 1906, I'm sorry. Can you take a pound Swissy? I tell you what, at the very end, 1906, because I'm a nice guy, I'll take a look at the pound Swissy. Let me see. Cartoons for Kids. Good to see you. Cartoons, welcome. Hello. I'm Motasham. Good to see you, Motasham. Welcome. Okay, guys, so that's sort of the crux of how to execute these trades. Let's go right back to our dollar. Our dollar yen, we're not getting any love here. I'd love a 5-minute signal here. Been a pretty good day for these. Really been a pretty good day. There would be their last one. That's really nice. Something like that. NQ. This would be our NQ futures, E-mini NASDAQ futures. Do we have a trade here? Yeah, right there was your crossover. So let's go ahead and go buy market. Boom, there it is. How can we execute that trade? How can we do it? Well, you see you've got the crossover right there. Right there is where it develops. Right there, there's your close. We got a terrible fill. What's my stop loss got to be? Stop loss got to be right down there beneath this swing low, about $250, and put your take profit up there right around there, about $250. Now, on these 1-minute time frames, it's not the best time of day to be doing this. It really isn't. But you do have an opportunity potentially there to make a few bucks. If it goes against us, it goes against. Okay, we're out. We're out. Now, what are we looking to do now, though? Potentially, are we looking to sell? Are we looking to sell the market? We've got a potential cross under setting up right here. The 5 is definitely working on the blue. You can't see it real well. I need to have this configured a bit different. But you've got that crossover potentially developing. You've got price closing beneath all 3 EMAs. Is it a decent sell? Is it set up yet? Cross under's there. Boom, sell it. Let's go ahead and sell it at market. Okay, there's your sell. Take profit's going to be where? Down below. Profit target, stop loss. I would put it right there above that. Somewhere down in here, maybe a 1-to-1, potentially. Right in this area. Is it a decent trade? Maybe. We can adjust our stop loss and put it up above the swing high if we wanted. With that big of a signal bar, I wouldn't even bother with it. So there's NQ futures starting to run in our advantage just a little bit. We're definitely, we're getting on some of these trades and getting them profitable. The real problem we've been having is they just haven't been hitting our take profits. So put in your mind, if you're a cash trader, we just took a $250 hit to the top side. Now we've got an opportunity maybe to make that $250 back plus another $200. We just have to leg this one out and go ahead and hit our profit target. By far, when you're trading crossovers, that's the hardest thing you're going to have to deal with is getting in there and hitting your profit targets. I try to keep mine conservative, but you can see the problems that you can have trying to hit these things. By far, the most difficult thing we do in all of trading is trying to predict how far a market will run and how far it will go. But you can see we've spent a lot of time trading in the green. You can't beat that. Let me see. Alec, good to see you. Alec, welcome. Hi, Shane. You say it is not a good time of day to run this strategy. What would be a better time? Think of gold and WTI. I would be trading gold and WTI from about 8 a.m. Eastern. Gold would be 8 a.m. Eastern through about 11 a.m. Eastern. That gives you a good opportunity there to get on some good action in gold. Like our gold trade, I'm watching it reverse right now. It's complete garbage. But what I would be looking to do is early in the U.S. session, right during that London-U.S. overlap, that's exactly when I would be doing this for gold. WTI crude oil is a little bit different. That would be 9 a.m. Eastern, which is about an hour later or so. Then you'd start with gold, and you would trade that up until about 11 a.m. Eastern, maybe 12 p.m. Eastern. So you've got about a good 2 to 3 hours. Now, if you're putting it on like the NQ here, E-mini NASDAQ futures, something like this, you could probably do it all day. You just got to make sure that your winners outpace your losers. It's basically all you got to do. That's the fortune, or that's the key to success. You got to figure out what you want to do. Now we're going to cursor back over. We got stopped out on our gold trade, and you'll see this swing. I always use the concept of swings. Oh, we haven't been stopped out just yet, I guess. But you'll see we're right back down. We're right back down to break even, essentially. I guess I thought we got stopped out. I'll go and let that one twist. This one right here coming back up against us, you're really starting to see what this is and why if you trade this as a system, if this is a system, if this is something you automate and you make an EA and you let it run, it's great. Just you can't mess with your parameters. If you're a cash trader, which means dynamic trade management, a lot of what we do on the live streams, then you go ahead and you just take the money when it's there. I don't have a problem with anybody doing that. Just be consistent with how you do it. And then the last thing is trailing stops. This would be a strategy where trailing stops are pretty good idea. Pretty good idea. Because you can lock a lot of things in. You can lock a lot of profits in. Essentially, what we're looking to do right now is to get in on a breakout, if you think about it. I mean, I haven't talked about RSI down there as confirmation, and we're not going to. Yeah, okay, our stop loss just got hit in gold. Does not surprise me at all. And now you're reversing back up against this. So we got a good initial move, and now it's sort of anybody's guess which way this market twists. That's the break. So that's the 5-8-13. So you got a lot of thinking to do about how you want to execute personally. So that's what I would say, Alec, for the best thing. Let me see. Phil, managing the trade really is the hardest part. 100%, Phil. It's psychology. It's your pain threshold, your pain tolerance. I find that my trade management is much easier when I'm extremely confident in my stop loss. Extremely. Am I really confident with this stop loss? No, not really. Not really. You can also manage it in terms of crossovers. So this trade, for instance, wouldn't have a stop loss or a profit target. You would just manage it as a crossover. So we took the short here, and then if it bounces back up against you and gets the crossover, then you would get out of the market there. A lot of traders do that. It's not a bad way to do it. What you can do with that respect is it gets you in on big moves, and you stay in the market. Whereas this way, if we're using static parameters, we could really get hurt. We could get knocked out here before the getting gets good. That's for sure. So something definitely to think about there. You see the price is definitely blowing up in our face now. If you're going to be an MA trader, a crossover trader, this is probably going to be life. This is how it works. Things are going well. They're going well. They're going well. Oh, price doesn't go the way I thought it would go. And now you can see we've got a crossover brewing. So should we reverse on this crossover? We could. We certainly could. Or we could just let it twist. Just going to let it twist and see what happens. See if we get stopped up. Let me see. Callie, I tend to trail my stop loss to tight. There's no problem with that, Callie. Because think about what you, in this situation, if you would have moved your stop loss right down to, say, break even, something like that, you would have got stopped out at break even. We didn't quite get the money. You didn't hit your target, but you also didn't take the loss. So what's that worth over the long haul? Maybe worth a lot. If we would move in our trades to break even, then we wouldn't have taken a loss in the gold. We probably would have got stopped out on our U.S. oil trade, though. We would have got stopped out right there. So you guys see what I'm getting at. Now, this one right here, we probably should have reversed and went short right there. I missed it because we were looking at this NQ trade, but there's sort of your move right there in gold. You'll notice that we had a pretty good look there. There's your cross under. Even on a bullish candle, you still got the cross under and the cross under there. Boom. You're riding just a great short. So there's absolutely nothing wrong with that. As far as NQ goes, we're probably going to end up losing this one, but that's okay. Pretty good tutorial. All of these trades traded to the green, every single one of them. If we would have taken the money in every trade, we would be way ahead. But we're talking systems right now, and that's okay. That's for sure. Let me see, Callie. I tend to trail. I misread your comment. I tend to trail my stop loss too tight. And that's easy to do, like in this situation. You know, if you would have trailed your stop loss, it would have saved you. You maybe could have locked in maybe a little bit of profit down in here when this crazy candle sort of got involved. But right now, we've got a crossover. Theoretically, we could be out of the market because this just crossed over, and we could be looking to the long side, or we could just hold our original trade. Once again, these are questions for you. Definitely questions that you can explore for yourself. Does this trade win? The odds are against it, but it may. It may. We've got a legitimate stop loss there. We just got to wait and see what happens. All right, now remember, this is sort of a bit of software that's going to be coming your way relatively soon. I was doing some audits on it last night, and for like 3 or 4 hours, I was auditing this piece of software. This is the algobuilder.com software that they're going to be launching the newest update here in the next couple of weeks, and you're going to see a lot more from AlgoBuilder. This really is fairly robust. This type of thing works well, absolutely works well for maybe something like a 3 moving average crossover like we're doing. And it does all this. It plots the executions. It does all sorts of things that I just can't really do. These questions that I'm asking you today, you can figure them out on AlgoBuilder. Is it better to use a static stop loss and a static profit target? Is it better just to run with the crossovers? When the crossover happens, I go short and I hold it until it crosses back over. These are the things that this AlgoBuilder, this AI technology can help you do. So AlgoBuilder is going to be, I just got a chance to demo the most recent update of this software. It's evolving quickly, and the guys in the back office, I mean, these folks have really built something here that has incredible potential. So AlgoBuilder is something that you may be able to tinker with. You get it free with your Switch Markets account. They'll get you started with a few credits, and then when you'll find yourself upgrading to the more advanced packages, because once you get started back testing this stuff, you're going to want to know exactly, you're going to want to know a million things. This right here, pretty good software, and that's one way that you can get in here and say, okay, what is the answer to that question? Am I supposed to move to break even and get out? Am I supposed to leave my stop loss up here? Am I supposed to have a bigger take profit? AlgoBuilder can help you build all that. It just takes some time and effort. It can be done, though. AI has opened the door to all these questions, guys. There's nothing right now that we can't figure out with AI. And it's an exciting time for me because, I mean, I was back in the old days, man. I mean, my back testing was, my back testing was right there. It was all done on paper, pen and paper. That was my job, was to back test by hand. And now you've got the incredible technology at your fingertips. If you don't know how to use AI as it pertains to trading, take some time, mess around with it. I mean, it really can. It's exciting for me because I can get answers to things that I never could before. And that, to me, the discovery end of it, the research end of it, is still probably the most rewarding out of all of it, believe it or not. So our trade's back, right? It's back. Pretty good, isn't it? Just a nice little double top. You got to love our stop loss location. That, guys, right there is prima facie evidence of stop hunting. That right there was our trigger bar. If we're right there, we get stopped out. We padded it. We're in pretty good shape. Now we're back down to break even. The question is do we want to let it run? You know, do we want to let this thing run? We've taken some pain. Are we okay with taking a loss right now? I don't know. I mean, it's a pretty good opportunity just to get out. However, we could see this market really move down. We've got to take that market structure out right there, that swing low. But we could extend our profit target desires. You can see if we get into this chain down in here, we could definitely fill in something like that at a true 1 to 2. I don't have a problem with that. AlgoBuilder can help you figure out if that's the right thing to do. So let's go ahead and put this one back up. I like let's go 450. That'd be pretty good. There's a trade. U.S. oil still sort of staggering around. I think we're going to go up and get paid off there. I wouldn't be surprised if we break above 87. As far as gold goes, looks like we missed that gold. 1 minute's a stretch right now, guys, for gold. Good move there, though. 5 minute, if I was trading gold towards the end of the day, not the best time to be doing this type of thing, but a 5 minute chart, pretty good stuff. Let's go ahead and recap the gold market today. As we sort of, when we would have started, I was really touting 8 a.m. Eastern. So you see right there, that's about 5:45 my time. So right in here is where I would have been starting my trading day. And then right there, you get a nice cross under, nice move. That's a 1-to-1 right there, I would say. Let's go ahead and blow that one up. Let's go ahead and get started with the short. Just a quick recap on what we would have been doing. So right there would have been your entry. There's your cross under. So this one right here, you could have put your stop loss right above on those big candles. I recommend putting them right above or below there. So something like that. That would have been probably a routine 1-to-1 payoff. Got that one easily. So that would have been 1-0 on the day. If you reversed your position right there, which I highly recommend, this would be a different situation, guys. This would be one where you'd want to work from that swing low. Why would you want to do that? Because this bar is it's tight. It's very, very tight. If you're putting your initial stop loss there, you could easily get faked out. So if you were maybe looking at your entry point somewhere right in here, even right in here, let's say that one was a little bit sloppy and didn't develop until there, and you even were here, you still got that big, robust move, about 1-to-1. Very, very nice, beautiful timing, right around that New York Open. That's good stuff. Gets a little sticky in here, I can tell you that. Looks like we're going to take a loss right here. This right in there would have been your cross under, something like that. So your short position would have been right there. More than likely right here, right there. That would have been your short. If your stop loss, probably that swing high. That's what I would recommend. Something like that, you wouldn't have got any money really there at all. You'd have got stopped out. There would be your basic 1-to-1. Still, though, your loss is relatively small, and that's a significant big winner right there. So you took a loss there, and then you came right back with one later in the day for a short position that would have developed from right there, and that would have been a deal where could you have done that type of stop loss? You could have. That's a better one, right up above that swing high, and then you're looking to take a shot at maybe a 1-to-1, and you can see you hit the home run right there. So you're 3-1 on the day with a 1-to-1 ratio, and that right there, that's the big dog. That's your winner. That's your big winner. Even if you played it tighter with your stop losses much, much tighter than that, you're still going to walk away very profitable. So something to think about there. The 5-minute chart there, that's probably a pretty good basis for your strategy session there for gold. So what is that? 1, 2, what is that? 4 trades? Pretty good day. I mean, all in all, the only time you run into trouble with this stuff is this crap right here. This. It's called a weave. Nothing's happening. It's a weave. Frequent crossovers. Lots of choppy price action. Essentially, you're getting yourself stopped out or you're constantly reversing your position. Very, very difficult. What is the problem here? That right there is during the London overnight. I would be looking at that, especially with gold, London, U.S. overlap. That's what I would say. Let me see. 1906, is it wise to use the 920 as confluence to other strategies, or should you just let it be a standalone strategy? I would probably be using the 920 in isolation. It would be what I would be looking to do. Just that would be the strategy that I'd followed. You can use other things to confirm it if you want. RSI is a good one. Even moving averages, a different moving average. Maybe you want to add like a 200 or a 50 or something like that, just to sort of give you a long-term bullish or bearish bias. But I would just let the 920 speak for itself. I really would. More of a swing trading strategy, in my opinion. Let me see, Alec, what kind of market is this strategy more appropriate for, trending or ranging? You want a market, and this is a good question, Alec. Theoretically, a trending market, if you're shooting for those 1-to-2s, 1-to-3s, 1-to-4s, 1-to-5s, that's going to make you a lot of money with the 5-8-13. It really will. Because when you get into those trending markets where there's big upsides to these things, that's when you're going to get the huge winners. Me personally, I like a ranging market, but a big range. Essentially, I like a volatile market. I like being able to do things like this we did on gold. Making money on the top side, making money on the downside, making money on the downside. Or excuse me, upside, and then a little bit on the downside, and then a little bit on the upside. That's exactly what I like to do. This in here, when the market tightens up this tight, you don't want to be doing this. You don't want to be doing this at all. So to answer your question, I would love a ranging market, but the ranges have to be big. So like you'd say, a lot of people would say today gold is trending. It's up about 1.6%. I guess we could say that it was trending then. I don't think it's trending anymore. So, I mean, 6 of one, half a dozen of the other. If I had to choose, I would say a big volatile markets with big daily ranges. Probably your NQ. Your NQ is probably going to be one of the strongest ones you could put this on, especially like on a 1 minute for sure. Something like that. Man, it is hot in here. Holy cow. All right, 1906 Miz. Okay, we had one question here. I'm going to let these twist for a minute, and then we're going to go circle back around. That'll pretty much be a wrap for today in our workshop. Let's go ahead and pull it up. You wanted to look at the dollar Swissy? Let me see. Pound Swissy. Step right back to the monthly. Beautiful stuff right here. You can see 2025's low. We sort of pushed that lower. Yeah, this liquidity zone, excuse me, not liquidity zone, but liquidity sweep down there. That low is what is that, 1017, somewhere in there. Our low there was about 1029, very close. Very close, man. We just didn't quite get there. As far as what could we be doing right now, as far as a trade idea would go, are we bullish or bearish? I don't really see much there on the monthly. Let's go down to a weekly and see. Yeah, you're going to want to probably be looking to buy this in the short term. So potentially what you could be doing with this pound Swissy would be looking to buy pullbacks. These, I mean, I can draw these for you, but they're not going to help you. They're too far away. So if you do get a big move down there to 107, let's go to a daily. Compression. All right, here's a spike. Here's a clear-cut spike, sort of that, I wouldn't really call this a morning star, but you can see it's the same basic type of formation. It's just in an uptrend, so it's not really a morning star, just more of a doji. Somewhere from right there. Actually, that's a spike low right there, and so is that. I mean, this would be really tough Fibonacci-wise. What is this low? Okay, so this would be July's range right here. Somewhere right in there. Boom, boom. 1st of July. It's the top side of July, so this right around 108.40. Not bad. So there's your monthly range. You've also got a 13-period EMA right in that zone. So something right in there. Not bad. That would probably be my long. As far as what I think about it right now, this last few days is compression. Absolute compression. On the move today, though, 0.19%. Can we do anything with it right now? Probably not. One last thing I would do, just to make sure, see if there's one other level potentially that we could be looking at. Okay, you see the monthly. Really, what happened? Oh, yeah. How about that NQ, huh? All right. So we hit our profit target there. We stayed the course. Really had a beautiful stop location. Probably should have been up here to be safe. But now the market goes down and fills us up. That's fantastic news, right? So we hit our take profit there. Now, it wasn't the easiest thing in the world to do, that's for sure. As far as the Great Britain pound, Japanese yen, something like this. Yearly chart. Look at the lack of volatility on a yearly time frame. $111.40, something like that. Still way up. So I would say what I would recommend right now is probably a long side bias. I would take it right back down to that weekly. And, here's your weekly. No, excuse me, the daily. Pardon. Yeah, that moving average would be where I would be looking to buy, really to dig in and go long. You can see sort of there's a spike low if you wanted to look at that. Not a very big range, though, guys. Not a very big range at all. I don't like it. The Fibonacci's are worthless when the market's flatten out. 108.50. 108.47. I mean, that hit it perfect. That tested it. So clearly you got sort of an order block here, maybe a demand zone setting up. 108.50-ish. And then you've also got a 13-period EMA down there at 108.37. That probably would be the long side entry I would be looking for. Something like that. Something to think about there if you're trading that pound Swissy. Not the easiest thing to trade in the world, though. That's for sure. All right, let's go U.S. oil one more time. Yeah, I mean, we're getting the compression. We'll get the break. We'll get the break in the run towards the end of the day would be my guess, but that one's in pretty good shape. XAU USD, once again, 5-minute chart has been extremely strong today. Extremely strong. Right there, you can see that this 5-minute bar is over. Potentially what you could see here in the next 5 to 15 minutes, something like that, is a nice big bullish close up above that zone. Get the crossover to develop. 5 crosses over the 8, and then a gold close right there. And then essentially what you're looking to do is you're looking to buy this thing wherever it may be, up in here somewhere, and then that essentially would be your trade. If it were to set up, pretty good time zone to be trading. 5-minute chart for gold. Even though it's late in the day, you're still going to have plenty of time, or excuse me, plenty of room to potentially get that trade. Something to think about there. All right, everybody, that's a wrap for me today. The 5-8-13 strategy is by far one of my favorite scalping mechanisms. I really like it on short time frames. Just remember, the shorter the time frame, often the choppier the price action. As far as what can we really expect out of this strategy, it really is up to your creativity. I mean, creativity is the number one asset of any trader. And if you have the creativity and the desire and the drive to tailor a strategy like this to your liking and make it better, make it superior than what it is. I mean, anybody can sit here and wait for crossovers and buy and sell. Anybody can do it. What really makes this thing go is being able to pick the proper time frames, to pick the proper profit targets in the right markets. I mean, we could sit here on a 1-minute chart on the dollar-yen all day long, and it just probably isn't going to do anything for us. It's not moving enough. However, you could step back to maybe a 30-minute chart, get some clean moves. Maybe step back to a 4-hour chart. It's really whatever you want to do with it. I just remember those longer time frames aren't really scalping. Scalping, I'm probably looking at 1- and 5-minute charts. That's for sure. All right, everybody, I think I'm going to go ahead and sign off for now. You're welcome, Sean Evans. I hope that this was a interesting or helpful stream. We try to do these strategy workshops every now and again and do some live trading. We'll be back tomorrow with some live trading, some more live trading. We're going to go TPO charts, intraday futures, and Forex. I'll break down some analysis. It'll be more of a conventional stream, but we'll rock the market profile approach, the TPO charts tomorrow, and we'll sort of carry on where we're at money-wise with our TPO trading this week. I believe we're right around, I think we're plus 75 or somewhere in that zone, but tomorrow could be a great day. We could step in and make 300 or 400 relatively easily. Just depends on what sets up. So that's pretty much it for today. All right, everybody, I'm going to go with love PUBG, chat. All right. Ciao, chat, whatever. All right, guys, I'm going to go ahead and sign off for right now. You're welcome, Ralph. You guys have a fantastic trading session. Remember, if you need anything at all, I'm over at howtotrade.com. Go ahead and sign up for your free subscription. Click Get Inside of the Trading Room. Click on my picture. Send me a PM. I'm sure to get back to everybody that sends me one. And any comments on the live streams or some content you'd like to see, those are always welcome as well. All right, one last question here. Kurt Nichols, good to see you, Kurt. What is the better prop firm for Forex for the U.S. trader now? I don't promote the prop firms. I don't promote them. I will tell you this, that there are a tremendous number of prop firms out there now. And what I would highly recommend, Kurt, if you're in the process of picking one, I would run some Google searches. I would do some stuff on chat, and then I would go over there to Trustpilot. And I would check out some Trustpilot reviews, make sure that whoever you're doing business with is paying their bills, and make sure that they've been around for longer than a day or two. And I think that you'll be just fine there. But as far as the Forex here in the United States, it's always a little bit different here in the U.S. because, a lot of folks are really leaning on futures now because of the leverage, the speed, the volatility. All those things are very attractive. And Forex here in the States, the leverage isn't quite what it is overseas, so it's not as much fun to trade. However, there's some great opportunities in Forex trading. So if you find a good one, Kurt, let me know. I don't know right offhand. That's for sure. Let me see. Love, I'm sorry now. English chat, Google translation. Yeah, that's cool, man. I'm going to go ahead and sign off for now, but I want to thank everybody for joining us today. And like I said, I'm over at howtotrade.com. Go ahead, head on over there, get your free subscription, click on my picture, send me a private message, tell me what you think of the live stream, and I'll be sure to get back to you. You can also follow me personally on ShaneV_trader over on X. We try to post some trade ideas each and every day, and I'm usually kicking around there for, I don't know, I'm not on there all day, but I'm over there here and there. So we put out a daily trade idea as well, typically on X and on LinkedIn, on the How to Trade LinkedIn page, and then also in the How to Trade Trading Room. So you can go ahead and check that out as well. All right, everybody, that's a wrap. I'm going to go ahead and take off for right this minute. Back again tomorrow. Back again. Can't wait. 22 hours, 59 minutes, and 55 seconds. We'll be back up and rolling again. So I want to thank everybody for showing up. Have a fantastic trading day. As always, trade the action well, and we'll talk soon. See you. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with switch markets.